When people talk about the U.S. stock market, one name comes up again and again: the Dow Jones Industrial Average, often simply called the Dow. But what exactly is the Dow? Why does it matter? And what does it really tell us about the U.S. economy? In the next few minutes, we'll break it all down in a simple, clear way. The Dow Jones Industrial Average, or DJIA, is one of the oldest and most widely followed stock market indexes in the world. It was created in 1896 by two journalists, Charles Dow and Edward Jones. At that time, the index tracked just 12 industrial companies. Today, it includes 30 of the largest and most influential companies in the United States. These companies represent different industries like technology, healthcare, finance, retail, and manufacturing. Some well-known Dow companies include Apple, Microsoft, Coca-Cola, McDonald's, and Boeing. Unlike many other stock indexes, the Dow is a price-weighted index. This means that companies with higher stock prices have more influence on the index's movement, regardless of their total market value. For example, if a company with a high stock price rises or falls, it can have a bigger impact on the Dow than a company with a lower stock price. The value of the Dow is calculated using a special formula called the Dow divisor, which adjusts for stock splits and other changes. When people say the Dow is up 300 points today, they're talking about the combined movement of those 30 companies. The Dow is often seen as a symbol of the U.S. economy. When the Dow rises, it usually means investors are confident and businesses are performing well. When it falls, it may signal economic concerns or uncertainty. News headlines frequently use the Dow to describe market performance, such as "the Dow hits a new record high" or "the Dow drops amid economic fears." Although the Dow only tracks 30 companies, it still gives a general picture of how major U.S. businesses are doing. The Dow isn't the only important stock index in the U.S. Two other major indexes are S&P 500. This index tracks 500 large U.S. companies and is considered a more accurate representation of the overall market. NASDAQ Composite. This index includes thousands of companies, especially technology firms like Amazon, Google, and Meta. Compared to these, the Dow is smaller and more traditional, but it remains one of the most recognized indexes in the world. Several factors can cause the Dow to rise or fall. Economic data, jobs reports, inflation numbers, and GDP growth. Interest rates, decisions by the Federal Reserve. Corporate earnings, how well major companies perform. Global events, wars, trade tensions, or political changes. For example, if major companies report strong profits, the Dow may rise. But if inflation increases or interest rates go up sharply, the Dow could fall. So, the Dow Jones Industrial Average is more than just a number on a screen. It's a snapshot